Disney showed, oh, we had growth of 4% or 5% year over year in theme park revenues. And you look at it and you go, that's basically at or less than inflation, right? And so in actual growth, not really there. So when you see 18.9% growth, that's like, okay, that's real growth. That's you opened a brand new park, you opened Epic Universe. And I think that's going to continue for some time. Renegade Online. Content and experiences. This is what we're most interested in. And what I'm really looking to hear is if the boys at Comcast give us some more drilled down data in terms of number of people that showed up to Epic Universe when it opened, their expectations going forward. I think that, as you know, when we've covered Comcast's calls in the past, the amount of time that they tend to spend talking about the theme parks is not that much because, again, it's not that big a part of the company. So even during the Q&A session, there's not a whole lot of calls that come in with questions about what's going on at the theme parks. I think that's going to be very different today. I think there's going to be a lot of attention and a lot of questions that are going to get asked around the outlook for Epic Universe. And for those of you that follow a lot of the park vloggers, guys like our friends like Drunk 3PO, the Geeks and Gamers, the Park Hopping guys, and all these other great folks out there that go to the parks, you know what it looks like. You know how crowded it's been. But you look at theme parks up year over year. So again, second quarter 24 compared to second quarter 25 that they're reporting today, it's up about 19% in total revenue, up 4.1% in EBITDA. That's earnings before interest, taxes, depreciation, and amortization. It's a profitability metric. Call it operating income typically. When you look at this and you go, well, why is it only up 4.1% if revenues are up nearly 20%? Well, it kind of tells you right there, EBITDA includes the soft opening costs at Epic. So getting a theme park ready to open up, there's a lot of extra costs that go in, the kind of one-time costs that go in to really ramp things up to get it ready. As time goes on, and we may kind of already be there in this third quarter currently that we'll hear more about in a few months, we'll probably see, if I had to guess, we will probably see some of that EBITDA come up, a little bit closer to that revenue number, in terms of percentage. That gap is probably going to narrow a little bit more because a lot of the initial startup costs for getting Epic moving, and I'm not talking about just building it, I'm talking about all the extra costs and expenses you bear for massive training, hiring, putting everything together, advertising the hell out of this park. They talked about, the $100 million they probably spent in an advertising campaign. They started doing that about a year ago now. So all those costs factor in. We'll probably see that get a little bit better, but the future is looking really good on the theme park side for Epic. There's a lot of excitement around it. Honestly, the videos that we've seen come out of Disney parks lately, they look very empty by comparison to Epic. I mean, it's stark, the contrast. So I'm really curious to see what's going to happen when Disney has their earnings call a little less than a week from today, I believe on August 6th. We'll be back here at the same time that morning for that one.
We are extremely proud of the successful opening of Epic Universe in May. We're pleased with the early results, as Epic is already driving higher per cap spending and attendance across the entirety of Universal Orlando Resort.
I bet.
With strong food and merchandise sales and minimal impact on attendance at Universal Studios Florida and Islands of Adventure. Epic is the most technologically advanced park we've ever built, and we are getting high praise for the innovative attractions, immersive environments, 3 new on-site hotels, and our strong food and merchandise offering. As expected, our near-term focus is on expanding ride throughput to reduce early attendance constraints. Epic is trending in line with our expectations and well on its way to transforming Universal Orlando into a true week-long destination. Beyond Orlando, we're executing against a strong pipeline of new opportunities to serve more guests. Universal Horror Unleashed opens in Las Vegas next month, and we're developing a second year-round horror experience in Chicago.
Yeah.
Tapping into one of the country's top tourist markets. In addition, in Texas, our Universal Kids Resort is moving towards a 2026 opening, and we're continuing the planning process for our new park outside of London, slated to open in 2031. These projects reflect our long-term strategy to expand reach, enter new markets, and broaden the appeal of our parks portfolio.
In content and experiences, there are several key items I'd like to highlight. At Parks, revenue increased 19% this quarter, driven by the successful opening of Epic Universe on May 22nd, while EBITDA growth was limited to 4% due to soft opening costs at the new park. As Mike mentioned, we're really happy with the consumer response, and we're pleased with how Epic is contributing to the overall Universal Orlando guest experience and performance. We expect Epic to continue to scale over the course of the year, with higher attendance and per caps, as well as significantly improved operating leverage. More broadly, performance at our international parks remains strong. However, we do continue to experience pressure in Hollywood, and we think it will be a couple more quarters until we lap that.
Thank you. Next question is coming from Jessica Reif-Ehrlich from Bank of America Securities. Your line is now live.
Thank you. I guess it's time to get to parks.
Finally.
Could you maybe give us some more color on what you're seeing in the market dynamics in Orlando, whether it's overall market growth? You mentioned that you're not seeing that much cannibalization in your own parks, and maybe, like kind of ultimate operating leverage. And
they might be cannibalizing somebody else's parks down the street.
Great IP, but ultimately you'll add more. And then maybe just stepping back, like a kind of a broader question for Brian. As you look out over the next couple of years, there's been so much going on in all of your businesses. What do you view as the most underappreciated growth levers for Comcast as a whole? And then, sorry, but Mike, a follow-up. You mentioned the NBA.
She always has like 6
Why not
questions.
Q4 of 25?
Every call.
Okay, it's Mike, so thanks. I misspoke. It does kick in as the season starts, so it kicks in the fourth quarter, goes through the full season. So sorry for that. In terms of Orlando, we, I think between ourselves and the other parks business that's there, it's a very strong destination for consumers coming to market. And with both businesses investing heavily, I think that's going to continue to be the case to the benefit of everyone in the market. What we're focused on, obviously, is Epic, which is new to market. And as I said in the prepared remarks, we're really pleased with what we're seeing in terms of revenues in Orlando year over year, coming in across, when you look at the parks altogether, much higher per caps, and that's driven by getting people there for the wonderful experience that is Epic. So I think as we look to the second half of the year, you'll see just in terms of operating leverage, I think things are on track with Epic and Orlando for us. And operating leverage will be, improved simply due to the roll-off of sort of the soft, opening that we.
That's what I said before the call started.
Quarter,
See?
Which
Some
was
people
a
think I
short
know what I'm
period
talking about.
of Epic being fully open.
I think we're a unique company. A number of you were at Epic Universe. Not many companies on the planet could take the decade it took to build maybe the finest theme park in the world. And we're looking forward to doing that over time in London area. We've got some smaller adventures that are opening this summer in Las Vegas, and we just announced Chicago, and with kids in Texas and horror. We've got films, we've got Peacock. So I see so much excitement in our company, and I look forward to the day where the story's a little simpler. And I think that that's happening organically with what we just talked about. So very bullish, and I think the best is coming. So that's my thoughts.
Really fast, they brought up the statement that the Epic Universe opening has been almost entirely additive to the park, to traffic there. Sorry, I was trying to find another window here. Meaning that it wasn't consuming traffic from Islands of Adventure and Universal Studios, the two traditional parks. Meaning that they didn't just, the same people were showing up, but instead of, walking into City Walk and to the two older parks on Monday, they all just went over to Epic. No, it brought in a whole new swath of people, which is exactly what you want in this case. You don't want to be dragging the same people from one park to the other park, and well, we still had X amount of people visit. So Epic Universe has been almost entirely additive from what they're saying, and that is obviously the goal. And as Comcast, Universal have continuously brought up, the idea here is to turn that Orlando park system into a singular destination, like Disney has been for decades, right? People would go to Disney, and then they might visit some other parks while they're there. They're trying to get Universal where now that is that's a 5-day vacation in and of itself to go to Universal. That's what they've built with Epic now combined with the other two parks. So they're seeing a lot of upside there, clearly. It showed up a little bit on this report, but that was only 1 out of 3 months, basically, a full operation for Epic Universe in that fiscal quarter. So we have to see where it goes from there. Like I said, I'm really excited to see what it turns out to be next quarter. Theme parks, you see that plus 18.9% year over year. That is way ahead of even a real adjusted basis with inflation in it, right? So when, we've talked about in the past or maybe it was last quarter or 2 quarters ago, Disney showed, we had growth of 4% or 5% year over year in theme park revenues. And you look at it and you go, that's basically at or less than inflation, right? And so in actual growth, not really there. So when you see 18.9% growth, that's like, okay, that's real growth. That's because you opened a brand new park, you opened Epic Universe. And I think that's going to continue for some time. So my point is this. If you're expecting Disney to see, we had a 20 or 30% drop year over year for theme park revenues, I seriously doubt we're going to see that. That would be shocking, and you would see Disney's stock price basically just tank. I mean, a real tank. That would be horribly bad. I don't think that's going to happen. But what might happen is that you see something that's relatively flat year over year, or maybe up a few percent, or maybe, God forbid, if it's down 1 or 2% even, that's not going to be good. Make sure you're subscribed to Valliant Renegade and join us every Sunday at 6 p.m. Eastern for the live show.